Good evening, everybody. Welcome to the Locke and Your Success Trade and Market Updates for July 29th, 2012. As you may have noticed, we've been having some challenges with the website. We've had a series of hackers getting into our site, or at least trying to. Some of them have actually succeeded. I'll let you know I have taken a lot of measures to get this thing secured. I was on the computer 5 hours tonight getting this thing locked down. We have a whole bunch of new security software. We got a bunch of anti-malware software on there now. We also have all new passwords. We've completely switched the site over to a secure server, and that goes for every web page. And we've, like I said, taken a lot of measures to lock people out. And I also have a monitoring service on there now, so if somebody does get in there, I'm pretty notified pretty quickly about it, and we can track them down. So I think all this is well needed and really good improvements for the website. So that's a good thing. We're also working on a redesign too, but we keep getting kind of set back by things like this because it takes a lot of hours sometimes to straighten out or patch up security vulnerabilities and so forth. But we're making some good progress. All right, let's take a look at the markets. If we remember last week, I was saying I was short-term bearish early in the week, longer-term bullish, and one of the reasons for that is because we're more or less channeling here in the markets, and we had come up near the top of our channel. We're headed back down, figuring we'd come in somewhere near the bottom of our channel, then bounce again. This pullback was a little bit deeper than I expected. I more expected it to be up in this range here a little bit to bottom, so it came a little bit deeper, but it's nothing too surprising. The market has been overshooting its support and resistance areas occasionally for the last few months, so no big deal there. And you'll see it's pretty much the same thing on the Russell. I was expecting the Russell to go down to 775, and we went down 765. So we overshot that slightly. As far as market movement this week, I would expect the markets to push probably a little bit higher, and then come into the top of this channel and roll over back towards the bottom again. And we'll have to see if that comes true or not. It's going to depend a little bit on what's happening on Wednesday. I think the markets are kind of anticipating the Fed easing things up a little bit, and they're kind of positioning themselves for that. So you may see Monday, a lot of times you get 2 days like this, you'll get a little bit of a pullback into this range, at least intraday. But Monday, Tuesday, we'll probably hang in this area. We get the Fed announcement. We're probably going to have, with bad news, we'll come back to the bottom of the channel. With what they expect, we'll probably hang out near the top, maybe have a temporary breakout and then come down. And if something really weird happens and get some extraordinarily good news that's not expected, then we're going to probably try and break to our highs back here in April, which on the SPX are not all-time highs. All-time highs are back into up here at the the 1600 level or so. And we'll take a look at the Russell here. We've come into, we came down, like I said, we came a little bit deeper than I thought. But the market has been overshooting our support and resistance areas a little bit, so no, not a huge surprise. And we got a very strong bounce off of that. If the S&P does indeed continue up, we're probably going to match these highs up here at 828.15, which is kind of what I'm hoping for. I wouldn't mind to have an aggressive run up to this 820 area and then have it back off. If you know, our M3 trade is back here at the 750 level. I prefer it up at 770, but I don't want to pay that for the butterflies up there. If the market gets up into the 820 range, I'll be able to very efficiently roll these 750s that I have up to 770. So that would be really nice if that were to happen. Is it going to happen? Who knows? But we are coiling up pretty nicely on the Russell here. And if we get I think the S&P's kind of topped out. So even if the S&P breaks to the most recent highs, we're probably going to match this most recent high and back off and close the month. close the month somewhere in this price range, and I think a roll to 770 would be really nice. Of course, if it just turns around and backs off and come into here where I don't have to move at all, so that would be nice too. So it's I think we're positioned fairly well coming into expiration here on our August trade as far as the M3 goes. So my general opinion for the market is probably a little bit higher, then turn around and retest this line again. You know, one of the reasons I'm not overly concerned about a harsh breakout, at least yet, is I've been monitoring on balance volume. You see we're setting new highs in the S&P here. This is a SPY. We can't get on balance volume and Thinkorswim on the SPX. You know, we're setting new highs here. Our on-balance volume is not increasing. If you take a look at the IWM, we're getting a downtrend. We're getting a downtrend. So if we, you know, break higher, our on-balance volume starts to break higher into new highs up in this 500,000 range, then I'll be, you know, looking a little more seriously at it going higher. But right now, like I said, I think we come into this channel, this trend line here that I will draw. The IWM. I think we come into here, and then we reverse back down into this trend line here. And we shall see how that goes. Like I said, sometimes I'm right, sometimes I'm wrong, but that is my opinion either way. Okay, let's take a look at our positions here. We have two positions on. We have the August M3 trade. Towards the end of the day, we just barely started to run positive Vega in this. Of course, as time goes by, volatility, your volatility numbers, especially closer to expiration, start to really creep into your tent. So, you know, Monday, if the market hangs up here, we are going to have to make a bit of a correction there. If the market runs back, we'll be fine. Volatility-wise, we may end up wanting to do a bit of a delta correction. As of right now, I don't really have any issues with the position. Like I said, I was kind of hoping we'd make a hard run up to this 820 level. Yes, it'll pull us down some money, but it will allow me to run up to the 770s very efficiently. And if the market backs down at that point, then if you're looking at the charts, market comes up to 770. I'm sorry, comes up to 820 and backs back down into here into the 780 level. We will be looking quite nice for the close of the month. So we'll see how that goes, and of course our plan will be adapted and amended to if the market doesn't do what we hope it's going to do. If the market comes down, we'll be doing fine. Really the only scenario here is that the market just sits here and creeps up. It's going to force us to gradually, more gradually change things. It's not going to give us the nice easy roll up to 770 that we're looking for, but we'll see. We'll see how that goes. So here's the position. We are basically at break even, and if we get a nice down move, we'll be looking really nice. If we get a nice up move, we will start dealing with it. If we sit here, we're going to deal with the volatility issue also, you know, by midweek. So that's that position. Let's take a look at the other position we have open, which is the, well, actually, I should probably just review this a little bit. During the week, I think at the beginning of the week, we were something like this. We had been making, you know, we were down in here. As time was going by, yeah, the market was coming down, but you know, as the market's coming down, the you know, the time's going by, and our delta is, we were kind of sat here for a little bit. Our delta was increasing, and because our delta kept increasing on us, it kind of forces us to automatically throw in these debit spreads to help with our not only our delta but our vega and our theta numbers. And then I was starting to have a what we call a gamma trend problem where just the T+0 line doesn't flip up fast enough. You know, as we started pushing up here, you know, delta never really exceeded our maximum amount, but you know, the fact that we're negative delta for such a long time to the upside does start to become an issue. So I started tossing these calls in, and I popped two of those in on Friday morning. And anyway, this is where we sit. So that's basically what happened here, and that's that. And like I said, we're up, I don't know, $45, $50, something like that. Certainly not in any trouble. All right, so let's go to the bearish butterfly for September. If you remember, we closed the bearish butterfly for August. Very, very close to profit target. Here is the September bearish butterfly. Basically what happened here is 56 days to expiration Friday morning. I had planned, or I was fairly sure I was not going to be at the computer later in the day. So I went ahead and I put this on early in the morning, which, in hindsight, probably wasn't the best time to do it. We paid $11.60 for the butterfly, which is more expensive than I would want to pay. That's telling us this month markets are heavily skewed to the upside. We have, even though the markets have been kind of down a bit, the volatility and market skew is definitely favoring the bulls here. There's a lot of upside market skew. I went ahead and put this in, got filled at 1160. That puts my reference point at 760 and an add point at 800. As the market's running up, I happened to actually be home at 3:30, so I came in and took a look. And our delta theta ratio was significantly off. I think we were like 6 theta and 12 delta. So we almost doubled. And I went ahead and I did a forced roll for that. So I rolled this from 760 to 780. And that puts us where we are right now. So in one day we entered and we did a forced delta roll already. Mainly because we didn't enter at the end of the day like I normally do. I entered at the beginning of the day because I didn't think I was going to be here. Not a big deal. So we're now at, with a 730, 780, 830 butterfly. We are down a mere $180. Basically, we have an add point at 800. And when the market hits 800, we're going to add an 800. When the market hits 820, we're going to add an 820. Maybe not when it hits it, but when it exceeds it significantly. So if we do get that blast up to, say, 815, and I can get into my 800s here, and the market backs down like I think it's going to, then that'll look really nice. If the market continues on, we add the last 30 to 820. And if it continues up there, we start our rolls at that point. So we'll see how far we can chase this thing. And that is that position. It's looking fine at this point. And that's about it. If I babbled a lot today, I apologize. Like I said, I've been 5 or 6 hours dealing with security issues, and it's kind of late now. So I may not be thinking quite straight. It's very taxing doing that stuff. But anyway, have a great evening and a great week trading, everybody. We'll keep your eyes on Wednesday. We might get a big move there. And until then, I will keep you updated with the positions. And have a great week, everybody. Good night.